Hello, John Carter.
Hi, how are you doing?
It is very nice to finally meet you. And it's funny because at the top of this, I am going to tell people that you're my first cousin and we've never met. Well, my
That's
second
true.
cousin, actually. Your mom is my first cousin. Actually, I think we're like third cousins because your mom is my second cousin. Your grandmother is my first cousin. I think.
Oh,
I think that's how it works. We have such a big family, but I think like your grandma's mother is my dad's oldest sister.
my
So
grandmother.
I
All
think
right.
so.
It's your
Yeah,
grandmother's
is
sister.
my dad's oldest sister. I think so.
So then you are my second cousin once removed.
Right. There you go. There you go.
Yeah.
Because I'm stopping and thinking, I'm like, how are we related? Because I remember the first time my dad actually told me about you. He's very proud of you, by the way. And he was telling me
Mhm.
about you. And I think it was when you were in Africa. And he was like, you have a cousin that is in Africa and he's doing all this stuff. And I was like, really? Who is he? And he's like, John. And he's telling me, John Carter. And I'm like, I don't know any John Carter. Who are you talking about? Right. And then he started explaining. He's like, oh, it's your Auntie Sylvia's grandson. And I'm like, okay, I don't know who that is.
Right.
And then I think we found each other either on LinkedIn or on Facebook. I don't remember which one it was for. I think it was LinkedIn.
I think it was LinkedIn too.
Yeah. And then I was like, he seems like a nice guy. And then we started talking. I'm like, he is a nice guy. And then you could start. I remember you put how we got to this is you put something up about investing. And
Mm.
then we started talking. And I was like, he's really smart. And he just gave me some really good advice. And I need to get my button gear because I was telling you I had that money just sitting there all
Mm.
those years in a
Yes.
account, a mutual fund account or something like a brokerage account. And I
Mm.
hadn't, and it grew over time. And I was thinking if I had been a little bit more attentive to it, I might even have more money than was what was in it than if I hadn't. So I think it's an example of why I thought it would be a good to talk to you was I was like there are a lot of people that are around my age or a little younger and we have either retirement plans or we have money that we could be investing, but I think that the average person feels very intimidated by
True.
investing, and so you just kind of don't do anything because you're not sure what to do and you don't want to lose your money because you hear people talk about people losing their money, so you worry about it.
Mhm.
So I thought it
Yeah.
was good for us to talk, and I want to just make a little disclaimer. The lawyer in me feels it very necessary to do that this
Right.
is not investment advice.
No.
This is just a conversation that we're having where I just want people to give people some things to think about. But this is not investment advice. Please do not take anything that you hear in this conversation and run off and go put your money in anything. Um, Go get some financial advice. There are lots of different financial advisors. Even a lot of the brokerage firms have them. So if you don't feel confident like figuring some of these things out for yourself, go and get more information. But I hope that this conversation will encourage people to inquire into the idea of looking at the
Mhm.
stock market in a different way and thinking about investing in a different way and not thinking that they're not smart enough to do it. But that maybe they need to get a little bit more information so that they'll feel a little bit more confident about doing it. And talking to you made me feel a little bit more confident about doing it. So, um,
Awesome.
tell me a little bit about yourself and when you first started investing in the stock market.
Okay. So um I was about to say from West Philadelphia, born and raised. So that's a lie. No, but no, I was actually born in Brooklyn, New York. Um,
Brooklyn. I lived in
yeah.
Brooklyn until I was 9. So,
And my father was a medical officer, and so we actually spent a lot of time in the Caribbean.
yeah. Hmm.
Um, and then I ended up coming back to Brooklyn, graduated from Brooklyn Tech, went down to Atlanta, graduated from Morehouse College. And it was actually while I was in Atlanta um, that I heard the idea of investing, and I realized that it tied into another conversation that I had at Brooklyn Tech in regards to how to read the newspaper on a train.
Huh.
Um, that's actually something that was taught when I went to school in Park Slope. I went to MS 51,
Okay.
and they actually taught us how to read a newspaper on a train, which is a very mundane thing. But again, this is something that our culture is not really hip to, and it's not something that we really get taught on a regular basis. Like, that's just not something that is taught. So learning how to fold a newspaper, there was a part of the class where we were told how to fold the stock section so that we could read the indices in an easy manner. Okay.
Huh.
Didn't know what that meant at the time. I was a kid. I was like, all right, I know how to read indices. Whatever. It's a bunch of fractions. That's what it was when I was growing up. It was a bunch of fractions all over the page. And I was like, this is crazy. Got to Atlanta, and at Morehouse College, we had a group called we had two groups. So I was first in the Young Republicans of Morehouse.
I'm gonna try not to hold that against you.
I'm just saying.
I'm gonna chalk that up to the inexperience of youth and not knowing things that you should know that you now know. And I'm going to chalk that up to that. I'm not going to hold that against you.
I had to go through it. I had to go through it to get on the other side. I had to go through it.
All political affiliations welcome, but I'm not going to hold that against you.
So it was in the Young Republicans of Morehouse that I had an associate who told me that his roommate had gifted him a Rolex watch for Christmas.
Huh.
All right. And I was very intrigued by that. I was like, why does your roommate have money to buy a Rolex watch for you for Christmas? Got to meet his roommate, and his roommate informed me that his father was actually the owner of a company in Texas that ran cattle, oil, and I believe it was cotton. It was those three things that he was into: cattle, oil, and cotton. And the name of the company was a conglomerate of those three words. And it was there that my interest was sparked, that there are people who make like money, like play. And so I, through him, got involved in the investment club at Morehouse College.
Wow. Okay.
And so there was, with that investment club, this was like in the early 2000s, that I found out that they had done away with fractional readings for stocks, and they had moved to a digital or a decimal system for understanding how stocks work. Okay. And I was like, well, I can read it now. Let's see what this is about.
Well, because I remember as a child in Brooklyn, seeing people on the train reading the Wall Street Journal. And I always liked to read, so I knew the name of the newspapers, but I did not know what the Wall Street Journal was. And I remember one time when I was older, probably high school age, when we came back to the United States, seeing a Wall Street Journal and picking it up and reading it and having not understanding what half the stuff in there was, and then like putting it down and never looking at what again, until I was an adult. And then I would just kind of read it for like the political and other types of information. But once they got to like the pages with the stock stuff, I'd be like, okay, that's the end of that, and put it down, because I could not understand anything of what it was saying. And I always remember when I was a kid and the news reports where they would talk about the Dow Jones Industrial and the averages and what the NASDAQ and what it was doing. And again, I knew it was a thing. I knew it must matter because it was on the news, but I had no idea what any of it meant. And then when I was old enough to have a retirement plan, I, put money in a retirement plan, because I was advised that was something you should do when you get a job. You should put money in a retirement plan. But again, had no understanding of what mutual funds were, what stocks were, how you bought stocks, any of that kind of stuff, until much later, when I have a friend who's very great with money, which is something I never claimed to be. And she was on the cover of Black Enterprise magazine. So then I felt the need to like read it, and it was about her investment portfolio and how well she had done investing in certain funds in Africa and other places. And so I was like, oh, this is actually a thing that people should do, right? And I need to learn more about it. And I remember opening the brokerage fund and putting money in there, like setting it up for money to go in there every pay period. And I picked some stocks that I liked, things that I used, which I had read. Warren Buffett said he liked Dairy Queen, and that's why he had bought it originally. So I bought things I liked, like Starbucks. And I bought Coca-Cola because
Yes.
I like Coca-Cola. And I bought a couple other things because I liked them, not because I knew that much about them per se, but I felt like these are things that I use on a regular basis. And so if I'm going to spend my money buying this cup of coffee, I felt like, well, then I should invest in this company because I spend so much money buying coffee and drinking Diet Coke every day, right? And so,
Yes.
and the prices were within my reach, that I felt like I could eventually own some stock if I kept putting money in there, because I was buying it incrementally at the time.
Right.
And I think later I bought some other things, but mainly that's how I started, was that I just bought a couple of stocks that I felt like I knew something about the companies, and that were good companies that I thought were good. I think I bought GE at one point as well. Well, that one didn't do as well after a while, but I bought some of that as well. But it was all kind of like products that I was aware of, and had some kind of idea about. So why do you think the average person is so intimidated by the stock market?
Well, I think there are a number of reasons for it, and many of them are historical reasons. And they've since taken very many steps to cut back on that. I'll give you an example. If you wanted to purchase one share of Warren Buffett's company, Berkshire Hathaway,
Mm-hmm.
um, do you know how much money you would need to have on hand?
I would think, well, if you wanted to purchase one share,
One share.
I would think it's running somewhere around $3,000 or more for a share. How much would you have to have?
You would need to have
Oh,
$350,000
wow. It's that high now.
to buy one share of Berkshire Hathaway.
Really? It's that high?
Yes.
Okay.
Now, there are two stocks that Berkshire Hathaway has now. One of them is trading at a more manageable pace, around $300.
Mm-hmm.
Okay. But the main one, the one that Berkshire Hathaway is known for, is around 3,000.
300,000. I know that Amazon is super, super expensive. And I can't
Right.
remember what they are per share, but I remember like telling, where I was looking at the different costs, and I was telling my sister what different stocks cost. And
Right.
we were both laughing at, the impossibility of ever owning any of those stocks. But I didn't look at Berkshire, so I didn't realize that it was that high. But I know
No.
Amazon and Google are super expensive.
And so that was one barrier to people becoming investors, is that in order to purchase a single share, you needed to have a lot of money.
Right.
Another barrier was that there were fees associated with purchasing and selling any amount of shares. Okay. There was also a requirement back in the day that you needed to purchase 100 shares at a time.
Mm-hmm, mm-hmm.
Okay. And there was a requirement that you needed to have ample funds in your account to cover the holding of your securities until the actual security was placed into your possession.
Wow.
All right. So there were a lot of things that were preventing people from getting into the stock market. And so our parents, our grandparents, our great grandparents passed on a lot of that anxiety to us in this generation, even though Congress has taken a lot of steps to reduce those requirements for the simple American, for the average investor, period.
Mm-hmm, mm-hmm.
Okay. Another thing that was very beneficial to the average investor is fractional shares.
Right.
Okay? Fractional shares essentially a portion of your stock that you can purchase. So if I want to buy Warren Buffett's $350,000 stock, I don't have to buy a whole one.
A whole share. Yeah, you can buy a share of a share now.
Right.
Yeah.
Yes.
I
I
know
can.
this because that's how I was able to buy Starbucks initially. Now I own actual whole shares of Starbucks, but
Right.
initially that's how I was able to buy into it. Yeah.
Exactly. And so when I got started investing, that was one of the things that I had to do. I had to I had to suck it up and buy some penny stocks. Like,
Okay.
I'll be honest, I bought a couple of penny stocks. And when I say penny stocks, I mean they were trading at about $6, $7, but I needed to work and save up in order to purchase 100 of them
Okay. I
because
see.
it didn't make
Yeah.
sense to purchase any less than 100,
Hmm.
right? Because I had another fee to purchase each of those shares. And so that was, one of the things that I had to do back in the day when I got started. So I think that's what primarily inhibits people and makes them feel like the stock market is some like magic carpet ride that they'll never be able to get on.
And that it's just for really wealthy people. And that's not necessarily an unrealistic view based on what you shared. It's kind of changed a lot. And I think it's changed, in my personal opinion, because really rich people have realized that it benefits them for more small little people like me to be in the game, right? Put our money in the game. But I think that for a long time it was something that was only accessible to people who are really wealthy. And then for people who are of color and Black people specifically, who don't have a lot of money, and even the ones who do, are not always as well educated about finances. So you come up with something that makes you successful, but you don't necessarily know and have the access to the kinds of people that you would need to have access to always give you the right kind of advice. And when people get burned, it makes them less likely, like if they make a bad investment, it makes them less likely to want to make another one. And so I think that's another thing that's a barrier to people, is that, they anecdotally see things on the news, or they hear things, or they hear of a friend of a friend of a friend who lost money doing something. And then it also makes you feel intimidated about even trying to do it. But from my perspective, I think that it's really an important thing for someone to consider. And I mean, even if it's a small amount of money that you put in there, but just trying to, from an investment, just making um, decisions for your future, it's a good idea to at least educate yourself about what you're deciding. I mean, whether you decide to do it or not, educating yourself about it before you decide whether you're going to do it, and not make an uneducated decision that, oh, it's just bad and I've just heard all these bad things and I'm not going to do it. What's your advice to someone who knows, who's similar to me, knows absolutely nothing about the stock market, but wants to invest? How should they educate themselves?
Okay. Um, there are a couple of ways that you can do it. I think one of the easiest ways that I found was the website Morningstar.com.
Mm-hmm.
Um, and the reason I found Morningstar to be a useful tool is because I was able to look and compare a variety of stocks at one time.
Okay.
All right. They do have some different tiers, so there is a Morningstar that you actually have to pay for. But on the free version of it, you can still look at different stocks and see their historical data
Okay.
and get a feel for what that stock has done in the past.
And how
Uh,
they've performed.
right. And what their
Okay.
price to earnings are, things like that. So that would be one aspect. Um, Investopedia is another good one. And I think that is good for helping with jargon. There are a lot of words that people use when investing
Mm-hmm.
that don't mean anything to a normal human.
Mm-hmm.
And
This is
I,
very true. I know this because I was talking to a financial advisor the other day, and he lost me about ten minutes into conversation. And
yes,
I mean, I was enjoying talking to him, but then he started talking about certain things, and I was like, uh-huh. And I just kind of like stopped listening. And then
yes,
kind of came back later, because
yes.
I was like, I have no idea what this man is talking about.
Right.
Like none.
Like I was just thinking when I was thinking about how to explain Morningstar.com to a layperson, um, I wanted to say something like price to earnings ratio. But that doesn't mean
Right.
anything
To me,
human.
yes.
You
Yeah, because it doesn't mean anything to me. I'm like, what does that mean? I don't know.
know? And that's why I would recommend that second website, Investopedia.
Okay.
Um,
And I
to
will put all of these links to these in the comments so that people can see them. Any
right.
others that you think are good places for people to get information to educate themselves?
I would always encourage people to watch the news, things like CNBC,
Mm-hmm.
because it gives you a context for the numbers that you will see on Morningstar. If you look up Starbucks on Morningstar, you're going to see a trajectory. You're going to see it going up and
Right.
down. You're going to see, they're going to have like a bunch of different words on there. Um, ROI, return on
Return on
investment.
investment. Uh-huh.
What does that mean? But when you look at it in context with CNBC or like news that's going on right now, and you compare it to news that happened when certain stocks did certain things, then
Mm-hmm.
you realize that there's a correlation because there are humans who invest in the stock market, and humans are influenced by their society and by what's going on around them.
Right.
So, like, even with the stock market going to, its record highs now. All right. Last week, I told people, don't look at your portfolio.
Mm-hmm. Mm-hmm.
It's gonna
I
hurt
saw
you.
that. You know what?
Right.
I don't spend a lot of time looking at it. So some mornings I have an account with Schwab,
Mm-hmm.
and I'll do a blog post at some point about why I think Schwab is a great account banker to have if you move overseas. But that'll be another conversation. But I have an account with Schwab, so I do log onto my Schwab account a lot simply because I have a checking account with them. But I also have a brokerage account, and today I actually moved all of my shares from Robinhood over to Schwab because I want to consolidate everything,
Mm-hmm.
and I was on hold, and there was a long recording where they were explaining and I actually listened and I
Ah,
understood most of it, and they were talking about the dip in the market last week,
yes.
and basically saying why people shouldn't panic but things that they should do to
Yes.
address to position themselves for the dips that occur, right, in terms of diversifying your portfolio and that kind of thing. But
Mhm.
I see, some mornings I see lots of red. Other
Mhm.
mornings I log on and I see green. But I just don't, you know what I mean? I don't spend a lot of time stressing out about it because I feel like I've picked pretty solid stocks for
Yes.
the most part. Um, and so I realize the market is going to do different things. And so days are going to be up and days are going to be down.
Mhm.
And I actually took the opportunity when things, during COVID, a lot of things were down to buy a couple of things that were cheaper that I
Yes.
wanted. Like I've always wanted to own Southwest stock because I
Yes.
fly on Southwest so much. It's my favorite
Mhm.
airline, but it was
Mhm.
expensive and I couldn't afford it. Well, after COVID,
Mhm.
all the airline stocks
All of them.
dropped
All
like
of them.
to the floor. And I was like, ooh, this is my opportunity. I can finally afford to buy some Southwest, right? So I did. But I don't like scrutinize it every day, frankly, because I don't have the time. But I
Yes.
just don't spend a lot of time. I probably will be pay more attention soon as I become #unemployable and become, independent,
Mhm.
independently employed person. Then I'll probably care more about what the performance of my portfolio. But I really appreciated what you said when you were like, yeah, just don't look at your don't look at it too hard this week. Cash out Carter.
Yes.
I love that, by the way. Um, because it's going to do that, and if every single time something goes down you start freaking out about, oh, I got to get rid of this, I'm like, it is a short-term and long-term thing, right? And can you talk a little bit about how you think people should think about it if they're going to become investors, whether it's kind of passive like me or more active the way you are? What kind of perspective would you advise someone have?
Um, my guiding philosophy is buy what you know, don't panic in the dips, and invest for the long term. In other words, think about what you want your portfolio to look like in the future. Because if you are thinking about what you want your portfolio to look like in the future, then, and you have purchased stocks that you believe in because you have looked at either their fundamentals or you've looked at their business plan and you feel like their business plan is solid. When you've done those two things, then when you see the dip, it changes how you perceive it. Right. You don't perceive it as a loss, like I lost like $1,000 today. You perceive it as I have the opportunity to buy more so that when this thing finally goes back up, because I have looked at the fundamentals, I have looked at their market, I've looked at what they are bringing to the table, and I have made a decision that this is something that I want to support. And so when you see that dip, you realize that this is an opportunity for you to actually double down and ride the wave as it goes up higher again.
That makes me feel better, because a couple weeks ago when they were down, I bought a couple more stock from Southwest because I was just like, I could afford to buy 2 more today. I think I'll buy a couple more today. And then it went back up. But I think that's an important perspective to have, because otherwise you'll panic when things drop precipitously, like last week. I hear, because I really didn't even look at it really, because I had too many other things going on last week till I saw your post. And then I was like, wait a minute, what's going on? And then I just saw all this red and I was like, oh, things must not be going well this week. And I just logged back off because I was like, what are you going to do? It is what it is. Do you recommend, and not that you recommend, but do you manage your own, right? Because it's not really about what you recommend, but what do you do? Do you manage your own portfolio? And if you do did you ever have anyone professional manage your portfolio, or have you always managed it for yourself?
Okay. I did have someone manage it for me when I was, it was probably like 15 years ago.
Okay.
And I had them manage it for me for maybe a year or two. Mm-hmm. And what I realized is that people have philosophies that they follow. Every investment advisor has a philosophy or school of thought that they adhere to. And it's important that your financial advisor, that their philosophy matches up with your long-term objectives or your long-term goals. Because if there is a mismatch, you will not feel happy with that relationship. You will feel some anxiety. You will see things happening and you'll say, well, why didn't they do X, Y, and Z? Even if you don't understand everything that your financial advisor is doing, they have a fiduciary responsibility, meaning that the law requires that if they work for you, that they need to look out for your best financial interest.
Right.
Okay, that is their job. And you can actually sue them if they don't do that. So there is some safety in that. If you are not comfortable managing your own portfolio, it is good to get a financial advisor who has the fiduciary responsibility to make sure that your investments are doing well.
Well, the lawyer in me feels the need to say, you can sue someone, but the proof level is significant. So it's not just, I feel like he didn't do what I liked and this isn't going the way I wanted, so I'm going to sue.
There has to be proof that
you have to have evidence that's based on certain standards. So I don't want people to feel, just go grab somebody because, right. So I do recommend that you spend some time vetting whoever you hire. I always believe in hiring people based on referral and based on, and always talking to multiple people. So last week I was talking to multiple financial advisors and basically interviewing people to get a sense of what their perspective was, what their philosophy is, what they would advise around certain things that I had questions about, how they respond to me, how they spoke to me about things. Because my thing is always, if I don't know about something, I want you to explain it to me like I'm 6.
And
I want,
also,
and
what
I,
does the client list look like?
right. I
That
want,
is
but
something.
I want you to explain it to me like I'm six, but not make me feel like I'm six.
Oh,
Right.
yeah,
And
yes.
so it's very important to me because I have, a certain, because I have, it's not an area of confidence for me where I
Hmm.
feel like I know a lot about it. I want someone that is not going to make me feel dumb when I ask them a question, but
Good,
can also tell me if I'm wrong about an assumption I'm making and
good.
explain things to me in a way that's not so jargon heavy that I don't like when they're done explaining I still don't understand what they were talking about. So that's
Yeah.
kind of some of what I was um like thinking about when I spoke to each person, evaluating them around not just whether they knew the area, but
Hmm.
more how did I feel talking to them and interacting with them? And did I feel like I would want to call them up and ask them a question? Or would I feel like he's going to think I'm an idiot for asking this and I'm not going to want to call? That kind of thing. So I think that you're right that if you don't feel confidence, it's important to hire someone and understand that and make sure you hire someone who has a fiduciary responsibility. And usually if they work for like a company or whatever, they will. So you have to do your homework, make sure they're
Yes.
certified and things like that, and get referrals. Like ask people who you might know that do actively invest and are using financial advisor. Are you happy with your financial advisor? Do you
Right.
like them? How has
Hmm.
your portfolio performed in the last 5, 10, 15 years? How
Hmm.
long have you had them? Different things that you can ask people to get a sense of. Because I mean, if you've only been working with him for a year, I'm probably not going to hire him off of 1 year of performance. So just
Right.
asking someone questions to get a sense of whether or not their referral is sound and
Hmm.
whether or not the person that they're referring to you would be someone worth considering. Are there any, you talked about Investopedia and Morningstar.
Hmm.
Are there any other apps or websites that you would tell someone who's interested in investing in the stock market but knows very little about it to research or to look at for research purposes?
The only other one that I would say besides Investopedia and Morningstar is probably Nerd Wallet.
Okay.
Um, I think they do a very good job of having different writers come on and explain, very specific parts of the investment world to people in a very simple way.
Okay.
Um, so that would be Nerd Wallet would be my other resource. Um, I mean, I came up in the school of hard knocks, so like I had to like read books like when
Okay.
I was at Morehouse. Like I actually had to check out books from the library, and I don't even remember a lot of the books that I read, but it was just books that I had to read to learn and understand how options worked, how
Oh wow, you like went full in.
oh yes, yeah. This was because it was a club. It was a club that we had at Morehouse where
Okay.
I
That's
mean
awesome
people
though.
yeah, people were like very everyone wanted to one up the next person. So everyone wanted to know that they knew as much as the other guy in the room.
Oh wow, that's
And
awesome.
it was definitely a good way of, everyone pushing each other um to learn more. And so that's really how we did it. I that's how I learned how to start reading. And that's when I actually took an interest in the fractionals coming out.
Oh, so now you know what that's why you're like, I know what those fractions mean now.
Right,
Wow.
right.
Okay. Because I still have no idea what any of that stuff means. I just know what green means, and I know what
Uh-huh.
red means, and I think I know what the points mean, but I
Right,
don't know any of the rest of it. That's why I'm always in your inbox because I'm like, I don't know what this means. I'm gonna ask John, right? Because I don't know what this means, but for
right.
a normal person, you know.
Mhm.
And I don't even look at the numbers and the stuff. I still don't read the Wall Street Journal, so
Right.
financial
Oh
stuff.
no, you
I
got
still
to.
don't
Yeah.
read that part. I still don't. Um,
As a matter of fact, yeah, that would be the other thing. Wall Street Journal.
uh-huh.
You can get a free edition of it.
Mm-hmm.
Um, if you do have to pay, try and do a trial, like 6 months or 3 months,
Mm-hmm.
and see if you can glean
Value. Yeah.
value from it. because it is, an expensive proposition to be buying a newspaper these
I
days.
know. Yeah, information costs now. You know what I'm saying? It costs now. They
Yeah.
first they got you with all the free subscriptions. Don't get me
Yeah.
started about that. And now information costs.
Yes.
They getting you coming and going with everything. The streaming, everything is free till it's not free. Because I have I have subscriptions to a couple papers, but the Wall Street Journal is not one of them because I'm not fond of their owner, so I'm not going to give him my money. But I just is like, information really costs now for like every different type of source. Business Insider, I mean, all of them figure out a way. Oh, you want more information? Now you have to pay us. So it's a very different. So people do have to make like decisions about what's most valuable
Yes.
for getting financial information. And I'm much better at listening to things because I listen to a lot of podcasts and stuff like that. So I've been trying to like find podcasts that talk about investing specifically for Black people and in very plain, understandable terms. But I'm
Yes.
still like investigating which ones I like. I just found another one, someone that I heard about in Breakfast Club. So I was like, oh, I'm gonna have to listen to that podcast and see if
Right.
I like it, because I like it when people like you are when I talk to you, I understand.
Mm.
You explain things well without like using big words and stuff, because today was the first time I ever heard you say anything about ROI or you know
Right.
the other thing. So you usually say things in really simplistic terms when you're talking to me, so I always am like, oh, I'm going to ask John because he will explain to me in a way that won't make me feel like I don't know what I'm doing at all. So before I ask you this question again, I want to make sure I reiterate, this is not for the purposes of telling anyone what they should do or where they should put their money. It's just informational, and because I'm curious, what are
Mm.
you investing in right now? Like, what's your favorite stock that you own right now, or two,
Oh.
if you want to share?
So let me pull it up. Um,
Because I know you sent me one, and it's actually doing well. I was beginning to question you for the first couple of weeks, but I hung in there. I'm not going to say what it is because, again, I'm not trying people to be like, oh, she said whatever. But
Right.
thank you for that, because,
Okay.
but I was going to curse you out around week 3. And then I was like, what the hell is this stock this man told me to put my money in? But now it's doing great. So I was like, oh, I might have to buy some more of that next time it drops a little bit. But I was like, he told me to, because I remember when I asked you, well, what do you think I did? And you
I
told me,
do.
and I was like, about around week 3, I think it was, a 4, it was not doing well. And I was like, what the hell? But like I told you, I'll look at stuff and then be like, oh, well, I'll see what it's doing in the next couple months. If it's still doing bad, then I'll ditch it. You know what I mean? But,
Right.
and I rarely get rid of things, which is probably bad.
Mm-hmm.
Right. And it's probably because I don't pay any attention to it for very long. So I look like at the bottom line, I usually look at like how it's performed over a period. Mm-hmm. And if overall it's performing well, then yes, I usually don't tend to get rid of a lot of things. But yes, that week 4 and 5, I was like, I don't know about this. Yes. But now it's doing well.
Right. So a lot of my so I'll tell you what my philosophy is now, or what my goals are now, mm-hmm, so that people will understand where I'm coming from. I'm interested in generating cash flow.
Okay.
Okay. So I invest in a lot of stocks that pay dividends far above the cost of living. Okay. All right, or the cost of living increase. All right. Typically each year, your dollar loses about 2%, 3% of its value.
Okay.
Okay. And so the stocks that I invest in are those that pay more than 4 or 5%. Okay. So I have things like Philip Morris is one of them.
Me too. I have Philip Morris. I love Philip Morris, by the way.
Yes.
Philip Morris is one of the ones actually that I bought way back when.
Yes. Oh,
because I said, people gonna smoke.
Yes.
Okay, and they're never gonna stop.
Mm-hmm.
I'm buying some Philip Morris. And I bought it, and it has consistently done well.
Oh, it will not disappoint you. It will not. Um, another one that I have is Altria Group.
Okay.
Um, I have the ExxonMobil. I have the I also have a what's called a index fund or ETF. It's an exchange traded fund.
I have no
Okay.
idea what that means, but okay.
And
But we'll
it's
talk more after this about some of these things because I have questions,
right.
more questions.
So I have one that's Global X is what it's called,
Hmm.
and I have Super Global X. Both of them pay upwards of like 7%.
Are those funds?
Those are yes.
Okay, so those
So
are funds. Okay, they're not individual stocks; they're funds.
right,
Okay,
they're funds that
okay,
are traded like
okay,
stocks. That's why
okay,
they're
okay,
called
okay,
ETFs.
okay. Yeah, I have a lot of individual stocks that I've bought. Um,
Mhm.
I think I have one fund. I don't remember. Like I told you, I don't.
Mhm.
I think I do from way back when, but I don't even remember now what it is, and I probably need
Right.
to pay more attention to that particular pool. Um, so that's interesting. So you have a mix of different things.
Right. And actually, what I recommend for new investors is for them to buy a fund, either an index fund
Mm-hmm,
or like an exchange traded fund,
mm-hmm.
because when you have a fund, you have a cross section of the market. You're not heavily invested into one single
One thing.
stock.
Okay,
Um,
okay,
on top of that, so your base, my recommendation for people is that their base should be an exchange traded fund, index fund, um, something like that, a mutual fund, any of those three is what their base should be. And the the cherry or the icing on the cake should be the particular stocks that you know and that you like,
okay.
because those are what's going to provide you with that added boost, sometimes that added heartburn.
Mm-hmm, mm-hmm,
Okay.
mm-hmm. Yeah.
But those are the things that are, a little bit more volatile than the funds overall.
Okay. So anything else you think you'd like to share that you think would be helpful for people who are novices or know nothing about this but are very interested in uh,
Mhm.
getting into the stock market? And I think specifically because, my audience is a lot of people who are, 45 or older. There are a lot of women who are single, Black women who are single, or Black women that have children,
Mhm.
or even married but have children and are looking at moving abroad or already move abroad. A lot of them, some people have retired early and they have money, but they're not sure what to do with the money to make sure that it grows. Other people have funds invested and they want to use that to move, but they're not sure. So that's why I'm even doing this, because I do think it's important for people to think about these things when they're thinking about how they're going to live abroad. And even though it's less expensive, you still need to be generating income, and if you have investments, you want to make sure your investments are working well for
Mhm.
you so that you can remain unemployable, as I call it, and never have to think about coming back unless you want to. Is there anything else you think people should think about as people, just as novices or just getting into investing?
Yeah, what I would definitely encourage people to look at and to try and understand or wrap their mind around is a dollar cost averaging. Okay,
Okay.
thinking about dollar cost averaging. Again, that's one of the things that I learned there on Morehouse.
Black colleges, I'm telling you,
I'm telling you, those
don't sleep on the historically Black colleges.
black colleges. So, what one of the things that we learned was the power of dollar cost averaging, and essentially what that means is every month that you get some money, okay, you put a portion of it into the stock market. You put a portion of it into a fund that you um, believe in. And the reason why I say that you put it into a fund that you believe in is because sometimes it's going to be up,
Hmm.
sometimes it's going to be down.
Right.
But if you continually invest a regular amount. Now, you're not changing the amount that you invest. So you're not like doing $100 this month and then next month doing, $50 and then next month doing 200. You're trying to do $100 every month,
Every month.
right? At the same level in that particular fund. The reason you do that is because over time, it will allow you to purchase the stock at the lowest price and hold it until it reaches its upper echelon. Okay, so it's essentially allowing you at every point in time to not be paying the most for it. And when it goes up to a higher level, you already bought it at its previous dip. So that's one of the things that I would recommend, dollar cost averaging.
To get a good handle on dollar cost averaging.
Right.
Okay. Well, this has been very educational, as I knew it would be. And I have more questions, but I don't want to, we could talk forever about this because I have so many questions. Thank you for taking the time to talk to me. I don't know that you do individual. I know people are going to ask me, like, does he talk to people individually? And I will get back to them about that. And we'll talk about that because, I've been talking to you about the fact that you should think about doing that. But we'll talk more about that later. But thank you so much for talking to me. I will probably be talking to you again because about some other things I have questions about. But it has been a pleasure, as I knew it would be, and educational. And so I thank you, and I'll be talking to you soon.
Thank you.